Hey, good evening, people. How you doing? It's Jermaine here from AvoidingBroke. Hope you're keeping really well. So, guys, today we've got another whiteboard session where I'm going to take you through the top ways that I'm researching the buy-to-let housing market right now. So, for anyone who's been following us, you know that I'm a big lover of investment property, and right now, this whole coronavirus period has given us the thoughts, the prospects that there's going to be some opportunities in buy-to-let housing. And there are some key bits of homework that I'm doing right now, and I want to share them with you for how we can start looking and assessing the market to see where we may get some opportunities. So if it sounds good, let's go. So guys, the first thing I'm looking at all the time is the economy. Now, it might sound really obvious and you might be thinking, but Jermaine, we're always looking at the economy. Well, in many respects, that's absolutely right. But I'm trying to really get a sense for how the broad macro economy is performing. I want to be understanding where confidence really is, where people may be having challenges, but they're not necessarily getting reported in the media. Where there may be opportunities that again are not necessarily getting picked up, because these are the kind of factors that have a big impact on housing. So if, for example, we had an outlook that said the economy is experiencing negative growth, well, negative growth lets us make assumptions about where the job market is going. It may help us make assumption about where the investment market is going or where the house building market is going. So keeping up to date on the broader economy, and I mean global as well, very, very important, key part of my research. Second thing that we look at is employment. So there are two elements of employment that I'm really, really interested in on any given day. One is what the level of national employment actually is. Because the higher the rate of employment, generally speaking, the more prosperous an economy is. And economic prosperity gives me a sense of how much activity there may be in the housing market. It also gives a sense of how likely it is people will be able to pay their rents. So that's a massive one. Looking at the macro level of employment within an economy gives me that sense. The other key part about employment is it tells me a lot about what people might be doing in terms of supply and demand. So, for example, the higher employment is the more people might be looking to go and pick up property. That means there could be more competition for me. The lower employment is, it might be fewer sellers who are in the market, fewer buyers who are in the market, potentially more sellers, and that may give me some opportunities. So employment gives me that really interesting double whammy of how likely are you to pay your rents, and also what could I be expecting in terms of the amount of competition out there for these properties. Third thing I like to pick up on a macro basis are interest rates. Interest rates are key because interest rates help determine what I'm going to be borrowing at, and that in itself then helps me start figuring out things like profitability. Interest rates are a fantastic economic indicator anyway. But certainly the way I'm looking at it, if you're looking at buy-to-let property as a commercial opportunity, well, the lower your interest rates, in theory, the cheaper your money is, in theory, the greater your margins can be. Now, there are obviously some assumptions built into that. But I definitely always want to know my rates, because calculating profitability of any potential deal is critical. So I pay attention to where those rates are and where we think they may go. Because again, you not only look at profitability in the immediate term, but you also think about things like, should you fix a deal for 2 years, 3 years, 5 years, or if you're in some of those geographies where they've got long dated debt, you could even fix it for 20 years. You never know. But that's where you've got to be savvy on the interest rates to help you make those decisions. Now, very closely, guys, linked to the interest rate is your personal affordability. So your personal affordability is absolutely crucial because that then determines how much you're going to be able to leverage. And as we know from my earlier videos on property investing for beginners, leverage is like a secret sauce that we put on these deals to help us get wealth faster in a more scalable way. So there are a few interesting ways in which your affordability can be altered. So you may save more in your deposit, which in itself lets you afford something that's more expensive. You may also be able to get deals that require you to put down less deposit. So rather than, say, putting down 25% of a deal, you may only be able to put down, say, 20%. And that's going to give you a bigger multiplier on the money that you're going to be investing. So having a sense of what's possible, let's call it the art of the possible, is really important because it helps you get a sense of what kind of deals you can start getting involved in. And if you're working with other people, it helps you get a sense of how much assistance you may need or how much external backing and investment you may need. So it's really important to look at that affordability. The fifth thing I cover, and I've kind of mentioned it and it's linked very closely to interest rates, is just looking at aggregate supply and demand. Supply and demand in property markets is like a great unknown. I mean, they talk about property moving in cycles, and sometimes you've heard them talk about a buyer's market and sometimes a seller's market. Well, I'm always interested to know where things are going because that gives you a sense of what to expect. Can't guarantee anything, but generally speaking, when you've got a very hot market and there are a lot of buyers, you tend to see prices increasing. When you've got a market where it's really more sellers than buyers and demand is low, well, that's where there tend to be a few more deals to be had. So it's always really important for me to have a sense of those dynamics that are going on. So right now, for example, it looks like property prices are continuing to ratchet up. So you may well go and suggest that this is a seller's market. Okay, interesting. That means you've got lots of supply creeping in. You've got people who want to. You've also then got loads of demand. You've got people who want to purchase those properties. So those sellers are going to be the one who have got the real position of power because that property is a scarce resource and you've got lots of demand. Really interesting. If things move, it could turn to be a buyer's market. So you could see supply increase, demand fall, and that's where people like me are going to swoop in for some of those tasty deals. So guys, I bring all of this together and then I kind of look at this and add it to what I'm going to call point 6 here, which is the economic outlook. Now, the economic outlook, in some respects, is a bit like an investing philosophy. If you were to believe that the economic outlook were negative, and let's take the example of someone like, say, where Warren Buffett has the belief that the outlook for airline stocks is quite negative, and I think for banking stocks as well. So he's sold off a lot of his positions. That is then helping shape his decisions in the future. As a property investor, look, I personally think it's quite the same. If you've got a sense of where you think you are in the property cycle, you can start making decisions that suit your risk appetite and your outlook. And so for me, I'm always pulling together that information, thinking about where I think we are in what the economic outlook is and what I personally believe is going to be happening. Now, I know some people, I'd almost call them all-weather investors. They will invest at any time if they find what they think is the right deal. And they take a long-term view of property, and so they don't worry too much about the outlook. For me, I'm a little bit different, particularly at times like this where a negative picture could be around the corner. I'm personally happy to wait a little bit more. And that's my personal view of the outlook. You listen to some other fantastic people and they'll say to you they love to invest at all times. And that's fine as well. It really has to suit your needs. But guys, hopefully you found this useful. I've taken you through my views on why we look at the economy broadly, employment, interest rates, our personal affordability, aggregate supply and demand in housing, and the economic outlook to help shape that picture about how and when we might invest in that investment property. Now, I'm going to follow this video up, guys, with my beautiful suggestions for how you can start researching property and researching areas. But for now, I'm going to leave you with these gems. If you've got your own ideas, please drop them in the comments so I can learn from them as well. If you've got any questions or comments, please pop them in the comments too, and I'm going to get back to you. And as ever, guys, if you've been enjoying this content and taking value, please give a thumbs up, please leave a comment, and please give us a shout if there's anything else that we can keep helping you with. Until next time, guys, take care. Bye-bye.